Hello, everybody. Today I wanted to talk about psychology. To me, that's the most important part of trading. Any successful trader will tell you that, probably the difference between them as a losing trader and evolving into a winning trader was, understanding and conquering the psychology of the market, not just the price action. There's a reason why, 95% of traders lose, and that's not the only reason, but in a nutshell, in my opinion, it all boils down to psychology. There's a reason why two people can learn the same exact system, apply the same exact strategy. Everybody's looking at the same charts, and yet one can lose and one can be highly successful, utilizing the same exact system and the same exact strategy. um, for any new trader starting out, and myself included in the beginning, and still a little bit now, um, I'm not going to lie, it's the psychology isn't something that you just overcome and never deal with again. But for the new traders, I'm sure you have or are going through, that emotional and psychological hardship, in the beginning and now. When you, like I said in previous videos, you open a trade, uh, it immediately goes against you and you close it, and then as soon as you close it, it goes back in the other direction, or you take profit too quickly. You see a couple of dollars in the green, you close the whole position because you're afraid to lose a couple dollars, and then price takes off in your direction. These are the type of things that when they happen over and over and over, it just it wears down on you, and it really I'm not gonna lie, I wanted to quit hundreds of times. I swore everyone was against me, God was against me, market makers were against me. I mean, they are against me, but um, i just I just blamed everything but myself. The move happened because I went to the bathroom. I missed it because of this, missed it because of that, and it gets really frustrating, and it takes you out of your zone. The number one account killer in my eyes is chasing losses. You get down a little bit, and then you start raising the leverage, taking higher risks, taking gambles, trying to make up for lost money, and in the end, you just dig yourself a deeper hole. I mean, it's human psychology in general. People who you know feel like they have to make up for lost time, and in this case, money. So the key to understanding trading is to understand your own psychology. You need to look at, what are you feeling while the trade is open, and what can you do strategy wise to prevent those feelings from overcoming your trading. Um, for me, it just came through basically repetition of the strategy, getting comfortable with a position size, no matter how much I made or how much I make. I'm not increasing position sizes just because I have money. Because at the end of the day, people say, why don't you just use a ton of money with your skills and go on 100x leverage and just be a multimillionaire in 5 minutes? And it just it sounds good, but in reality, once you start getting into bigger numbers, especially, you'll notice that a little bit of drawdown that you might have been comfortable with a few dollars, or if you have a bigger count, a couple $100, you start seeing that and getting comfortable with that, and knowing that that's kind of the threshold of invalidating your trade, and you can handle that. But then when you start raising your position and you start seeing that drawdown is $1,000 or a couple $1,000, I mean, that'll change the way you look at things quick. So it all comes down to the psychology. You need to, like I said, you need to evaluate the things you're feeling. The whole purpose of what the market maker does in price movement is to psychologically shake out the weak traders, the impatient traders. That's the way the market is designed. They say the market is a device designed to transfer money from the impatient to the patient. And patience has a lot to do with psychology too. FOMOing into trades, that's another thing. I'm sure Everybody has done that, myself included, many, many times. You'll see, a big green candle, and the first thing you want to do is hit long. And sometimes that may work, but more often than not, I'm probably pretty sure that when you do that, you're getting squashed out almost immediately, as the market maker induces retail traders to believe there's been support and prices rising, and before you know it, as soon as the green candle's done, price goes all the way back down to recover it. These are the things, and also, that's part of the strategy that I've developed. That's a part of it is, I've been able to it's to anticipate those moves in my favor. Whereas now, when I see a huge green candle, my finger's not on the long button; it's on the short button. And as we get more into that, you'll understand what I'm saying. But the psychology in general is the most important part of trading. Um, you just need to identify, like I said, the feelings and emotions. I started a little, a little journal for trading stuff, because again, when I started, um, I didn't have other traders to speak with. So I didn't, at the time, I just thought the whole world was against me and everybody else was succeeding and I was the only one failing. And then you come to find out that, there's a whole community of people, from various levels of success that are all having various levels of struggle. Some people, might get it right off the bat. They're in the minority. I'll tell you that. People who start off in the beginning, their psychology is great. They don't FOMO. They don't, close trades too early, and they're just successful off the rip. That would probably be the top 1%. But, like they say, 95% of traders fail. You know, as a whole. So I'm sure that number is a little bit bigger for new traders. But like I was saying, I started a little journal. Started to write down like what my struggles were. I would write down, you know, just to get it out. And in the beginning, I would write down how I felt, when price went against me, why I closed, why I lost. I used the losses as teachers. I used my, instead of just looking at my wins and saying, oh yeah, I won because I got a great entrance and you know had the diamond hands, as they say, to hold the trade. But in the end, it's the losses that you'll find are your biggest teachers. Um, so as I was saying again, I would write in a journal. Not every trade, but some of the ones that really bothered me, I started just writing out. Where my entry was, where my exit, what happened with price, why did I do what I did, why did I close, why did I enter, how I felt throughout the trade. And in the end, I just started to identify the same feelings happening over and over. And at the same time, I was also evolving my trading, so I was seeing the same price action happen over and over. And that really just comes with screen time. There's no shortcut to screen time. So as I was evolving my trading, I was also evolving my psychology, and I think that was the biggest part. In the end, the bridge between my losing trading and my successful trading was a period of time where I just took off. I took off from the charts. I was still involved with other traders, but I didn't trade. I just watched price action, focused on the psychology of the trades, focused on what I was thinking at the time price was moving, without having trade. A lot of people use paper accounts, to practice execution. But for anybody who's had a paper account and a real account, most people, they become millionaires and thousandaires on their paper account, and then they get to real money and at a much smaller amount, because some people told me the paper accounts start you off with tons of money or whatever you want. So they would say to me, I started with $100,000 and I made $5 million in a month on my paper account, and then, I decided to make a real account with $500, and I lost it all immediately. I didn't have a single winning trade. So that's another insight into psychology. When it's not real money, you tend to how do I word this? See, you tend to not care as much about it. But you can also use that in the way where you can, uh, you know, identify the way you felt about trades when you took the psychology out of it, and that's the important thing. So I do suggest you have a paper account. I don't put much stock into, oh, I was, people say I was successful on a paper account, but I wasn't on a real account. I don't take away from them that they were successful on a paper account, but you know, my feelings are that the paper account is how you should be trading. I mean, some people are just gambling, hitting 100x trades and just letting them run and get lucky. But the people that really utilize the paper accounts the way they're supposed to, I believe that you'll find that the way you treat that paper account, the way you take the psychology out of it, because the psychology, point blank, is whether you're winning money or losing money and how your mind is reacting to that, or how your percentages are in the red or in the green. So, I find if you maybe start with a paper account, practice your strategy there, and the psychology almost comes out of it because there's not as much value placed on it. So the way you execute the trades, you'll often find on the paper accounts, is the way you should be doing it if you're doing it right. Like I said, I don't advise you to. There's no point in 100xing. Random spots on the chart, getting lucky and becoming a paper millionaire. That doesn't help your trading. But if utilized correctly, you'll understand that the way you treat that paper account, is the way that you should be treating your real account. People don't get nervous when price goes against you for 2 1-minute candles and quickly exit a trade because they don't want to lose. So that's another thing I would advise. They have paper accounts on TradingView. I think some of the platforms also have accounts that you can test your skills on also. But in the end, that's the major thing. It's market psychology. Once you get down your trading strategy, that will be the biggest piece of the strategy, because in the end, we're all looking at the same charts. The market maker can only do two things. He can move price and he can hit stop losses. That's all. That's, like I said, that's all he has in his arsenal. And we have all these tools, but psychology is what he has on his side, and it's the biggest tool. So if you can utilize your time to get your market psychology and your trading psychology, build the foundation and get it down, you'll find that you'll have a remedy to what the market maker does. So in the end, yeah, just wanted to bring you a quick video about market psychology. Like I said, I believe that's the most important part of trading. Also, you have to look at risk management. We'll get into that in the next video. Starting small, building your account, leverage. Besides chasing losses, high leverage too soon is also the biggest account killer. Another example for me is, I can use $100 on 100x leverage and trade with thousands of dollars. Why wouldn't I do that? But you'll find in the end, when a 1% move from Bitcoin goes against you pretty quickly, and hit your liquidation, that it's not, that 100x isn't all it's cracked up to be. So, me personally, I don't go higher than 16x is just happened to end up being my lucky number. But I'm more advanced of a trader now, but I'll never go above that, and don't have a need. Once you build an account and build consistency, you'll find that you don't need to take gambles. You can just make your little bit a day that you need, and if you're trying to make this a career, you'll find that you'll be able to just consistently make gains of good amounts, good percentages, because in the end, percentages is all that really matters. Get down your percentages and the money will follow. Plain and simple. I could show you charts on compounded money. 1% a day on $1,000. Ends up being over, $36,000 for a year of trading, just compounded 1%, 1%, 1%, 1% a day. That stuff adds up, and you don't see it in the beginning, but I promise you down the line, your account will grow. So just focus. What I did in the beginning and what I tell people to do is set a percentage goal for yourself each day, whether it be, I want to make 2% a day, 5% a day, 10% a day, and just set that goal. And when you can achieve that goal, for 80%, success rate over a 30-day period, then think about increasing your leverage. Before, if you can't do a 80% success rate, you know, you don't need to leverage higher. That's not what's helping you. I assure you that higher leverage is hurting you, because the psychology of seeing yourself go in the red that much and closing trades, or seeing you go in the green really quick and seeing that money and closing it. I promise you, on both sides of the ball, it's hurting you. So again, just wanted to bring you a brief video about, a little bit about the psychology and how I felt and how I went through it. And in the next video, I'll talk about some risk management and some leverage strategies. But again, I wanted this to be, one of the first videos, because I do believe it's, the most important part of trading. So I'm gonna let you go. You guys have a good day, and I'll see you next time.